We've actually seen some favorable decoupling from Bitcoin compared to, say, ARK stocks, right? So Bitcoin's less down than, say, many of the ARK stocks were, right? So that's kind of been a favorable decoupling, even though it's not been exactly bullish for Bitcoin. So I'm kind of neutral over on the next 6 months. I would expect volatility. Longer term, I think the fundamental picture looks great. The development that's happening on it, the use case for it couldn't be more clear, especially, you have people fleeing from Ukraine, and, ones that are self-custodying Bitcoin, they have some of the easiest time in terms of bringing wealth with them with the least hassle.
Lyn Alden is the founder of Lyn Alden Investment Strategy, a platform that provides equity research and investment strategies to help investors make better informed investment decisions. In an interview with Kitco News, Alden reacts to the sharply increasing inflation and the possibility that we slip into a recession. She explains that the best bet for the Fed is to tighten to slow down inflation. Given their track record of always doing too much, too fast, Alden adds that the economy might be heading right for a recessionary period or a more prolonged inflationary period. I don't think we have enough data to say for sure yet, but it's not looking good, Alden concludes. The expert analyst also gives her outlook on Bitcoin. She explains that the cryptocurrency might not be in a very good place right now, but that could change soon. She also talks about the asset's many use cases, including how useful it has been to Ukrainians since the war began. We will now take you to Alden's interview. Please take a little time to give this video a thumbs up and drop your comments and observations below. Thanks, and enjoy the video.
Going back, I've been on the inflation side for a few years now.
That's right.
And that funny thing is, I'm surprised by the speed with the inflation we got. I mean, part of it, when you add a war to the mix that was not, necessarily anticipated by me or a lot of other people, or at least not at this time frame or in this scale, that certainly adds inflationary force to it. And so the Fed being more hawkish than expected. But if you look at, say, where inflation is and where rates are, in some ways, they're the most dovish they've ever been.
That's right.
The biggest disconnect between rates and inflation since 1951. And so I think their clear mandate is to try to tighten. And the hard part for them is that they have a horrible track record of tightening into a decelerating economy, right? So if they tighten while PMIs are rising, they generally have a better shot of getting some decent gains there. Whereas if they're trying to tighten into a slowing economy, that's kind of the recipe for disaster. That's kind of when you ran into in late 2018. And so they're kind of running in that same environment now, but of course inflation is much higher. So I don't know exactly how far they're going to get, but I'm going to take the under on whatever consensus is for how far they're going to get. Because if you look at over the prior expansion period, right? So a decade-long expansion, you had like 3 mini cycles in there. You had rising, declining PMIs roughly on 3-year periods. And so you had these slowdowns that did not necessarily result in recessions. This one's a little trickier because we do also have yield curves inverted for a period of time. Some percentage of the yield curve is inverted. So there are kind of more recession indicators this time, but we're still in that period where we're dipping. It's unclear if it's going to manifest an actual recession or if we're going to kind of dip and then have a rising period out of this. If you look at Atlanta Fed GDP now forecast, last I looked, they were looking at something like 1% real growth annualized for this quarter. So there are a lot of things that look slow. And I think as you look out maybe 6 months, the question is this kind of a valley and a higher growth thing? I don't think we have enough data to say for sure yet, but it's not looking fantastic at the moment.
Okay. Well, do you think rate hikes are going to push us into a recession?
Well, so the only thing that rate hikes can really control here, because all the inflation we're seeing is two main things. One is there's all the fiscal stimulus, so it's more money in the system. And number two, you have supply side inflation, so commodity shortages, supply chain problems, add a war to the mix. And so the Fed, they can't print oil, they can't print copper, they can't fix supply chains. So all that they can really do is try to reduce demand, which risks putting you into a recession. It's kind of that whole game of they want to slow down demand, maybe soften it, get a dip, but they don't want to cause a recession. But it's almost like you're kind of stuck between a rock and a hard place here. So I'm not optimistic that they're going to have a soft landing.
So do we need to see interest rates at the same level of inflation percentage-wise before we see inflation come down? Is that what we need?
So that could certainly give a shock to the system, a deflationary shock. But I think the inflationary pressures are deeper than that. I don't think the Fed's tools really, especially given how high debt levels are, that they really have the tools to properly fight inflation. I think it's more of a fiscal problem, and it's more of just how we've structured supply chains. I think that this is only going to be resolved by improving supply chains, improving commodity capex, kind of the real world changes, and those are not quick changes. But one thing I caution people on is that for example, I'm staying in the inflationary camp. before the war, I was expecting maybe like a localized top in inflation. So we've obviously added fuel to that fire. But I don't really expect inflation necessarily to be a straight line.
Yeah.
I think that we're going to be in a very inflationary decade compared to the prior decade, at least. But even I'm still anticipating eventually slowdowns in inflation. Maybe the Fed gets a handle of it for a period of time, but then they end up having to loosen because they go too far, you have a recession, and then they cut, and then you get another round of inflation.
That's right.
So in the 70s, you saw multiple rounds of inflation. In the 40s, you saw multiple rounds of inflation. These things tend to come in bursts.
Alden speaks further about some scenarios that could see the Fed and Congress working together to address the increasing inflation. She explains that what's left is for policymakers to choose between a recession or inflation while also looking for permanent fixes, such as better allocation of resources, diversification of supply chains, and more infrastructural development.
Because suppose the Fed were to reduce the growth of M2 money supply. Are you saying that wouldn't be sufficient? You also need congressional support to somehow rein back spending, I guess?
Partially, because it depends on where that M2 growth is coming from. So, for example, in the 70s, it mostly came from bank lending.
Yeah.
Right? Banks would lend more money into existence because you had the demographics boom, right? So you had all the baby boomers starting to buy homes. Because of the demographic demand for commodities, and you had the whole the M2 expansion from loans.
Yeah.
That was a contributor. If you go back to the 40s,
yes,
it wasn't that banks were lending. It was that the government was spending a lot of fiscal deficits, into existence and having it monetized.
Right.
And so that's the M2 growth we've seen over the past 2 years. A lot of it is from that fiscal impulse, and they're rather rate insensitive. I mean, if they want to pass a fiscal bill, they're not looking and saying, well, what are our treasury rates at? They're just kind of passing it, right? So it really comes down to watching political gridlock, right? Because that's the environment that they're increasingly in, is this kind of gridlocked environment. And so it really does come down to Congress, but even if I think you had a perfect Congress, bringing this down immediately without causing, kind of a recession is challenging. It's kind of pick one, inflation or recession, and only in the longer run can you say, okay, how can we have the economy allocate its resources better? How can we get more commodities? How can we get more infrastructure? How can we diversify our supply chains? And that only comes with time.
Lastly, Alden also gives her outlook on Bitcoin. Her short-term outlook for Bitcoin is not particularly bullish, but she believes that things will change very quickly. She adds that we've seen some favorable decoupling that could indicate a better environment for Bitcoin.
So in the next 6 months, very uncertain, right? Because historically, if you look at rising and falling PMI environments, most of Bitcoin's bull run activity occurs during rising PMI environments. So you have favorable liquidity, you have risk-on behavior. Bitcoin tends to do very well. In declining PMI environments, that's when Bitcoin has historically suffered. But what's new is that Bitcoin's never really encountered a stagflationary environment in major developed markets. Right? So that's a whole new variable. I certainly would rather own Bitcoin than some of these companies that have tons of supply chain exposure, margin pressure, things like that. So we'll see if it starts trading like a commodity, like a monetary commodity. We've actually seen some favorable decoupling from Bitcoin compared to, say, ARK stocks, right? So Bitcoin's less down than, say, many of the ARK stocks were, right? So that's kind of been a favorable decoupling, even though it's not been exactly bullish for Bitcoin. So I'm kind of neutral over on the next 6 months. I would expect volatility. Longer term, I think the fundamental picture looks great. The development that's happening on it, the use case for it couldn't be more clear, especially, you have people fleeing from Ukraine, and, ones that are self-custodying Bitcoin, they have some of the easiest time in terms of bringing wealth with them with the least hassle.
And the Lightning Network, very quickly, is something that you've worked on and were researched, and that's contributing to the on-ramp and adoption of Bitcoin as a form of payment, right?
I think that's an under reported story, right? So we're seeing, for example, Bitcoin circling back to its original kind of intentions being used for payments. And Lightning is a layer on top of Bitcoin that makes it way faster. And it's still, varying degrees of decentralized. Maybe not as decentralized as the base layer, but it's some of your trade-off. And you get super fast payments. And now we had an announcement, for example, for stable coins that can be natively issued on Lightning potentially. So a lot of development in that space that I think is really interesting for the payment industry and could disrupt some of the major players.
We have come to the end of the video. Please drop your comments, thoughts, and observations about Lyn Alden's interview in the comment section below. Also, remember to hit the like button and subscribe to the channel. Thanks for watching.